What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 29th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a wide range of topics to discuss, but we're mainly going to be focusing in on how Bitcoin and total cryptocurrency markets, as well as precious metals like gold and silver, are finally showing signs of a clear bottom and looking for higher levels in 2020. So we've got all that and much more to talk about as we go through the video, so let's go ahead and dive right into it. So we can see here, taking a look across the board for cryptocurrencies, most cryptocurrencies are in a no trend scenario between 1 to 2% to the upside or downside, nothing too severe here at the moment. However, we can see here that valuations have been relatively neutral for over the past month throughout November and December in this case, right? And we're finishing up here the month of December, stepping into the new year, and it's a really important time to reflect as to whether or not markets are setting for higher levels next year or they're going for lower levels, so we can readjust our positions. And the fact of the matter is that we've been pushing sideways here for an entire month. We have completely broken off of the general trend here to the downside that we've had since back here in June or late June of 2019. It's really stepping into July where we started to get a severe amount of the correction. But I want to go ahead here and dive through some of the data. So we're going to be taking a look at Bitcoin. We'll take a look at Bitcoin dominance. I'll also talk about taking a look at total market cap here on the chart so we can see it a little bit clearer and why what we're seeing right now in price action is significant. And then we'll also take a look at some data science models. All right. So let's go ahead and start off here. So you can obviously see here, if we draw a general channel for the downtrend here between the highs and the lows, it builds a very clear trend here where we can start to see that price is starting to hold up on this higher end again like we had back here during the China news. And the question here is whether or not we're actually going to be able to start setting higher lows and continuing higher here, getting back above here around 8,000. If we can get above 8,000, we'll not only get past the previous highs here, but we'll start to have a chance to break out of the channel. And that's going to be a really final confirmation as to whether or not we're actually entering into the next phase of the uptrend and exiting out of this correction that we've had since back here in June. Now, why is this price level significant here for Bitcoin? Why is it that around this $7,000 to $6,500 range that we would expect this to be the bottom? Well, again, I don't want to be too certain of this right now, but take a look back towards history here. Back here, this is exactly where Bitcoin was resting here during this whole entire period, right? Around this range here, before it had the massive sell-off, okay? You can see that there was very clear resistance here multiple times here throughout October, November for Bitcoin around 6,500, right? So I think what we're seeing now, again, maybe not exactly perfect in this case, but it looks like, much like we did over here, we're making this general support here as we enter into the next run up here for Bitcoin. And as we take a look at the total market cap, it becomes even clearer on this, guys. Just being like realistic here. Oh, sorry, it's giving me a different total. It might be giving me the total of the company, but here we go. This becomes even more clear, guys. You can see even with the kind of wicks that we have down here, we made general support at a very similar range here that we held, right? Back here around when Bitcoin was tailing around 6,000 to 7,000 and market cap was holding at a very similar range. It's a matter of us holding this, guys, because as we've talked about, right, we want to see previous resistance become support. Well, look at what acted as resistance back here before we continue the rest of the rally. Practically the exact same price range of where we're holding right now for support. And again, sometimes you'll actually see it that in many cases we make support again in this case, right? It's kind of I don't really know how to put it in, I'm trying to build an analogy in this case, but you guys know I suck in analogies. The general gist here you can see here is how there's interesting interactions between big even levels, right? Tailing around the $180 billion range, we had support many times, resistance many times here before we continued onward. And also we have to make this support a few times as well in order to continue higher, to showcase and signify that there are not enough sellers to drag down price, that buyers are starting to outweigh the previous sellers who were outweighing buyers, right? And that's, again, it's the inflows and outflows of markets. It's support and resistance. It's what's called naked trading, right? Looking for these key levels. And no, you don't have to be naked. I'm wearing clothes while I'm doing it. Anyways, that's the general point, guys. I just wanted to make that very clear. We actually, I'll go ahead and show it here. I've had this on the chart for a long time. If you look here, we did the exact same thing here back here in 2014, and also when we exited out of the accumulation phase and had one of our first severe corrections here. Now again, a few points to bear in mind here. What's happening here, as I mentioned, is we're coming back down to that previous support range, right? Back here from over a year ago in this case, back to this range. And we did the exact same thing here, right? We came back down that range. Not to mention as well, it's important to understand that yes, this correction has been more severe even on a percentage basis, but there's a few things to factor. We're at a much larger market scale, and along with that as well, the important thing to notify is that we had a much shorter accumulation phase and a much more significant and higher gain in percentage of the rally that we had back here throughout 2019 than we did back here. So we're talking on a much larger market scale. Of course, we're going to have this kind of correction because things moved way too quickly out of the accumulation phase. You can see the general price, the time difference here. Go ahead and just draw the date range here. Really getting out of this kind of general range. You can see not many candles here on the weekly, whereas if we were to take a look back here, we can see that this was a very long time before we actually started to see some significant price action. Okay, so take a look at that. Let's go ahead and take a look at Bitcoin dominance, and then we'll talk about the broader market for Bitcoin here again. Now, one important thing to note here is I was a bit concerned here as we were starting to set a higher level here for Bitcoin dominance. We have started to roll over the last few days. It's not moving, really hasn't moved so much since we last really talked about the market. It's been over the last week, it's been relatively neutral, but it's going to be a question of whether or not we really get back down to this range here around 67 points. If we don't do that here over the next week or so, I'm going to be pretty confident that Bitcoin might start to be gaining dominance yet again. It might still have a little bit more room to grow, or that we're going to hold in this range to the upper band for a while around here, around 72 to 74%. For that, again, it might not be bad to focus on, I would say not so much, I'm not going to be diluting my altcoin positions, but keeping open to the idea that I might want to average into Bitcoin instead if it's going to be the better performer this week. And then cycling into altcoins when we get more later on into the cycle. As we talked about, the two optimal times really to hold altcoins, historically speaking, are when Bitcoin passes the previous high of the last cycle, which is, in this case, would be 20,000. So we're still a ways away from that. And along with that as well, when Bitcoin peaks out in its next cycle, so when it sets a new parabolic high, that would be when we want to look for altcoins in this case. Now, let's go ahead here, take a look at some of the data science models. I want to give you guys the most up-to-date price action on this, but it seems looking at Bitcoin, I think they might enter this information manually to the website, and they've been away from the holidays, for the holidays. But we can see here, last printed figure was down here on the 18th of December. Obviously, we have ticked up here since then. And taking a look at the 2-year moving average, in this case, we're actually probably getting very close to riding above this level, around 72, 7,300 right now, last I checked on Bitcoin. So we're actually very close. As we did in the last cycle, we dipped below here, below the 200-day moving average for a short while, and then we get back above it. So I think that's exactly what's happening now. So again, where we should be generally speaking. Stock to flow model, what was looking to be a little bit oversold here, we were definitely moving pretty low behind the stock to flow band here. We can see here though, again, this was back here on the 18th. So with price being a little bit higher, around 72 to 7,300, we're starting to tick back upwards, and we might cycle back above that line, right? Again, not too far off from where we should be. Again, there's a lot of other awesome models here, guys. You can take a look at the days of profitability. We're at around 86.4% last I checked, and I would assume with the kind of uptick we've had in price, it's probably going up to around 88, 89%. And the last one I'll take a look at is the Powell multiple, right back to where we should be, right? From the correction phase for the after exiting the accumulation phase, we usually come down here between anywhere from 0.6 to 0.8, and that's exactly where we came down this time. All right, and this has to do with the daily issuance of new Bitcoin in dollar terms versus the 365-day average of daily issuance of Bitcoin. So again, the new supply of Bitcoin entering in this case, and also factoring in the price in that matter. Right? There's a consistent rate of when Bitcoin are going to be issued, but that dollar value can give us a ratio in this case that shows some very interesting historical similarities, not only with the bottoms here, very clearly here around the 0.3 on the ratio, but also peaking out here around 2 here after we've exited out of the accumulation phase. All right, so let's go ahead and take a look at some economic data, and then we're going to dive into taking a look at not only the altcoin fantasy winners in this case, but also taking a look at gold and silver. Let's go ahead here and take a look at the, so this is basically having to do with credit exposure and margin markets, okay? So to keep the chart very simple here, you can see during corrective periods that there's a positive credit balance in this case, which means that there's less exposure to Margin trading, people, for example, in this case, during these periods of time, people probably have a much better chance of increasing their credit scores. In this case, they're starting to actually balance their books. There's actually finally a more kind of substantial balance in the sense of people and their exposure to markets. But in this case, we can see here that during the periods when we have recessions, that's when people again start removing risk, and that's when equities start to go down. Well, when the opposite happens, when people start to take on more credit and start to take on more margin, more debt, valuations start to skyrocket. That's really what pushes markets higher. And we can see here that even though we're not at absolute all-time highs, we were back here in 2018, we're still holding at relatively high levels here, pretty high exposure. And the question is whether or not we're going to need this to continue to expand to keep equities as high as they are, or if we're going to continue to see this decline and likely see equities start to decline because there's not that kind of buy-side exposure. There's not that kind of that exposure and risk to the market. Either way, it's at significantly high levels here. And the worry that you have in this case is the potential for margin calls. If a significant amount of price starts to get reduced here, if we start to see the S&P 500 tick down 10%, this is going to be massive losses for a lot of people who are overexposed, right? So that's the thing to keep in mind when you're talking about margin. Another thing to talk about as well, in the sense of commodities, I've been keeping an eye on, a potential play for some oil companies. We're going to talk a little bit more about it in our newsletter. But the thing is here is that over the last month here, we've seen an uptick in oversupply of reserves for oil, and we're seeing an uptick in price. Now, obviously, I think, many of you probably already get this. That's completely anomalous in this case compared to what we should be seeing, meaning that it doesn't make sense. It's completely off of what should be a justified trend, right? You can see here that when there is a cut or an undersupply in oil, prices go up. And when there's a glut in supply in this case, right, we start to see prices decline, right? We can see here when we started to, for example, get an increase here, the oil price collapsed here from 75 down to 45. Again, that's exactly what should happen, right? Because if you have more supply, that means prices go down. Supply and demand economics, right? Another thing as well to talk about here that's just very interesting, and I wanted to share it, is the lack of 0% returns in China. It almost seems like there's like this, unlike here, for example, you can take a look at the New York Stock Exchange listed firms. You get a much more kind of natural curve here around the estimate of what you usually get in the S&P 500 and some of the broader indexes. And you can see here, mainland listed firms in China almost like never step below 0%, which is very interesting. So it might just be the fact that China's going through a massive growth phase, as it has been for a long time. Who knows? Another thing to talk about as well, and sorry, I just want to let you guys know I got my dog sleeping behind me and stuff, so you might hear him snoring. But I'll try to talk to where you guys can't hear it. Anyways, another thing I want to talk about here is recessionary activity in manufacturing markets. This is another key chart to look at. So this is taking a weight between the different subsectors here that are starting to see a decline in activity here. So when this chart spikes up like it did back here in 2007 and 2008, this is a good sign here that markets are starting, the real economy in this case, is starting to slow. And we can see here that we hit the highest level since back here in 2008. It's pretty concerning stuff. If this continues upward, we're getting towards some very severe levels of fear here in traditional markets. And it's showing through the real economic data. This isn't me just kind of blowing things out of proportion. This is real data, right? So anyways, let's go ahead here. We'll take a look at one last piece of economic data. Then we'll talk about the altcoin fantasy winners and take a look at gold and silver markets. So weekly unemployment claims down 13K, but I don't really want to focus so much on what happened last week. I think Advisor Perspectives has some amazing charts, and they have a good time frame of data where we can start to really see here the general trend here. So this is the unemployment insurance weekly claims report, and you can generally see here how many people are claiming unemployment, right? So over time, you start to see a steady decline here. Through 2016 to 2019, we've really started to kind of slow down that trend here. Obviously, it's more sharp here once you're exiting out of recessions, right? That's where unemployment can start to really drastically reduce. You can start to have massive job numbers because the economy is making a rebound. You're stimulating the economy again. Well, in this case, it's starting to look like we're making a very clear bottom here over the last year. And as we step here towards 2020, we're starting to see what may be a curve to the upside. All right, it's not enough of a significant trend for me to get too concerned. But if we start to see this ticking up towards 250,000 or higher, this could be a sign that unemployment's not going to decline much further, and that we're going to see we're going to see unemployment claims continue to climb up. Right, so I just want to show these charts. I think it's very interesting to look at this. Again, these averages make it a little bit easier to just kind of understand the general trend here. But you can see we're starting to see some very spotty kind of jumps here. And that's even during the holiday season when there's a lot of seasonal hires. So interesting thing to take note of. All right. So let's go ahead and take a look at the winners here for the Altcoin Fantasy Charity Trading Competition. Again, guys, I want to say to all those of you who participated, no matter how much you might have donated, thank you guys for supporting during the holiday season. It's such a good time to do this. I hope you guys had a great holiday season, but along with that as well, it means a lot for the people we gave to. And again, for all you who donated, you helped a lot of great charities here. From Ocean Conservancy, Shriners Hospital for Children, Trees for the Future, and also Binance Charity. So we kind of, spread the crypto seed all over the place and stuff, helped a lot of people, and I think it's a wonderful thing to do. So I'm going to go ahead here. I've got a list here. I'll list out the top 3 winners. We have Andiari 4431, Trendcoin, and Agrant 8517. So if you guys are winners of the competition, congratulations. I've got it here on the Excel spreadsheet. I'm only going to list off the top 3 winners here in this case. Of course, there's the 3 different kind of top tier prizes. So you guys will be able to claim those. And the way that those were picked was done through Cynthia and stuff. She did a random, basically a random name picker in this case, and these were the overall winners. Now again, there's a list of other winners as well who won some of the prizes. It's not just the top 3, but again, that will all be sorted out soon after the holidays, guys. You'll be reached out to either from Cynthia or someone from the charity event who's going to help and deal with all the prizes. So you guys helped a lot. We raised a total of over, I think, $4,500 of donations, I think at least from the projects themselves, and that's not even including what we were able to raise from other participants who donated to the project. So thank you guys for all of you who participated. I think it's a wonderful thing that we were able to do, and I'd like to do this on an annual basis. I think it'd be really cool to do this during the holiday season next year. All right, last thing I want to take a look at here is gold and silver markets. Very similar to crypto here, ironically. Over the last few weeks, we've started to see a very clear bottom here after this correction in gold and silver, and we've started to see a nice uptick here in both gold markets and silver, right? We can go ahead and take a look at silver here as well. Very clear here, right? Got it from around $16.50 per ounce up to $17.74. Now, the thing that I want to take a look at here, and this is something that I don't think a lot of people do in markets, but it's a cool thing to do to really kind of get perspective on what's been a better investment for you in this case, right? So I'll actually do it with Bitcoin here in a minute too. But if we take a look at, for example, gold to the S&P 500, right? This is a very interesting chart you can start to do. And you can start to measure whether or not you'd be better off being exposed to one market or the other. So to make this a little bit more clear, I'm measuring this in a ratio of gold to the S&P 500, or SPX in this case. And you can start to see here that we've been setting consistently higher lows here, and I'm just formulating a general uptrend for gold compared to the S&P 500. Even though the S&P 500 has killed it this year, we have still seen gold continue to outpace the S&P 500 here over the last year. Right, we've started to see that ratio increase nearly about 20% more performance. Actually, no, sorry, it is more than 20% performance here. Getting close to a 25% outbeat if this was to go up towards 0.5, right? If we start to get back up in this range, it'd be a 25% outpace compared to the S&P 500. And this is really good to see here. Now we can start to see as well that this is coming at a range here where we had support back in the past, and you can see that we've got a long way to go if we want to get back to where we were back in 2011, right? So this gives gold a lot of upward room here. And as a macro trader, this is a really good tool you can use comparing the ratio between 2 indices or 2 different commodities or assets, because it can show you where is there room to grow. Is gold and silver oversold compared to equities? And we can clearly see, at least historically speaking, that's the case. We have pulled back dramatically, right? We're back at levels that we haven't seen since back in 2006. So that's the kind of stuff we look for, those opportunities where we can see what market is really kind of set to have room to outpace the other asset class. And another thing as well, a lot of people, I'll be fair, guys, we've been definitely wrong here in the sense of equities since 2018. Equities have continued to climb. But the interesting thing to take note of here is whether or not Bitcoin or equities have won out this year. Well, let's see in 2019. So we can take a look at BTC USD. All right, we'll go ahead and get it here on Coinbase, and then we'll divide it by the S&P 500. Okay. Well, look who's outpaced for the year. Bitcoin is still nearly 2 times more higher in the sense of performance, even after this sharp correction that we've had compared to the S&P 500. If you bought any time here throughout the early part of 2019, right? Even if you bought a little bit later here in April after the first real move, or if you bought sometime here between May, you're neutral on your money, right? So again, of course, yeah, if you bought at the peak at 14K, you don't need to compare that to the S&P 500. Yes, you're probably down a little bit, right? We averaged some around 10,000 and 9 and 8,000, right? Those positions, of course, we're not exactly up on just yet. But I also have had a ton of positions that I've been buying and holding from all the way back here throughout the past previous few years. And you can see here either way, generally speaking, if you're going to take the performance of equity markets from the exact beginning of the year to where we are now towards the close, then you have to do the same here with Bitcoin. And so far, it's actually been a better performing asset. And even if you bought back here, relatively neutral for an asset that can have exacerbated rallies and also exacerbated corrections. So I think it's doing pretty good. Anyways, I've rambled on enough for today, guys. A severe ramble with a lot of data today. And I hope you guys enjoyed it. I hope you guys are having a wonderful time with family, friends, just taking it easy. And outside of that, though, if you guys like the video, drop a like. If you guys want to support the channel, there's tons of links down below where you guys can support me and help me do this full time. And again, I'm so happy to be back from the kind of little small phase of censorship on YouTube. I'm very grateful to be here for you guys and make this content. And I'm glad you guys can be here for me. It means a lot. All right. So I hope you all have a wonderful day wherever you are, and I'll see you all in the next video. Stay tuned.